Welcome back to Smart Stock Sam, the channel where we cut through the noise, follow the data, and find the setups that actually matter. Today, we are doing a full breakdown of Palantir Technologies, and I want you to stay with me, because by the end of this video, you are going to understand exactly why the recent price pullback is not a warning sign, but a window. We are going to talk about why last week's breakdown happened, what the fundamentals are actually saying, and why the convergence of a massive options setup and one of the biggest tech conferences of the year could ignite a move that leaves late observers completely behind. Palantir just pulled back after kissing resistance. The institutions are loading up quietly, and a partnership with Nvidia is pointing at a $600 billion global opportunity by 2030. Is this the last dip before liftoff? Or is something bigger about to break down? Let us find out. But before we talk about where this stock is going, we have to be brutally honest about what just happened, because if we do not understand the miss, we cannot understand the opportunity. Palantir closed the week at $150.95, down nearly 4% on the week. Now, for the bears, this looks like confirmation that the rally is finished. But here is what makes this situation so fascinating. The fundamentals did not break down. The price did. 70% year-over-year revenue growth is not a company in distress. A $10 billion Army contract is not a company losing relevance. What we are looking at is a stock that got hit by a perfect storm of external forces while the engine underneath kept running full throttle. And sitting right on the horizon is the Nvidia GTC 2026 conference, a catalyst that has the potential to push this stock right back toward the $170 range. That tension between a shaky price and an elite business is exactly the kind of setup that separates investors from traders. So let us go layer by layer. Last week, I called Palantir a coiled spring. Early in the week, it looked like the spring was releasing. The stock opened at $155.69 and pushed hard toward the critical $160 resistance level. It peaked at $158.44 on Monday, and then it just stalled. It could not break through that 160 ceiling, and that failure flipped the momentum. From that peak, the stock slid 15% from its year-to-date highs. Now, if a company's fundamentals were cracking, a drop like that would make complete sense. But the forces that drove this slide were almost entirely external, and understanding that distinction is everything. So, what exactly happened? Think of this as an autopsy of a failed breakout. There were four specific forces that all hit simultaneously: macro, structural, internal, and technical. Any single one of these could slow a stock down, all four arriving at the same time. It is honestly a testament to Palantir's underlying strength that the stock did not fall further. Let us start with the macro picture, because this is where the fear originated. The broader market went into panic mode. The VIX, the market's fear gauge, surged above 35, triggering a mass rotation out of technology and high-growth equities. When fear spikes that fast, even the strongest stocks get sold. But Palantir did not just face the generic tech sell-off. It faced a specific structural shock as well. The Pentagon designated Anthropic's Claude AI, which is integrated into Palantir's defense systems, as a supply chain risk. That designation forced an immediate technical rework and a model swap inside Palantir's defense architecture. For a short-term trader scanning headlines, that sounds like a catastrophe. For a long-term investor who understands how defense contracts actually work, it is a speed bump on a very long road. And frankly, it demonstrates just how deeply embedded Palantir is in the national security stack. Because if they were not mission-critical, nobody would be scrambling to fix the integration. Then came the internal selling, and this one always gets retail investors nervous. Peter Thiel offloaded $290 million worth of stock, and CEO Alex Karp sold nearly 500,000 shares. Now, does insider selling always mean something is wrong? Not necessarily. Executives sell for all kinds of personal financial reasons. But in the short term, when you add that supply to a market already in fear mode, you create what is called a supply overhang. There are more sellers than buyers in that moment, and prices drift lower. And that drift triggered our fourth force, a death cross on the daily chart on March 13th. A death cross forms when the short-term moving average crosses below the long-term moving average. Technically, it is considered a bearish signal, but here is the detail that most people missed. This death cross formed on below-average volume of just 42 million shares. That is not panic selling. That is the absence of buyers, very different from an avalanche of sellers rushing for the exits. The distinction matters enormously for what comes next, because here is the counterweight to all of that bearish noise. Palantir's core business is operating at a level that is genuinely rare in the software world. Total revenue came in at $1,410 million. That is 70% growth year over year. But the number that stopped me cold is the United States commercial segment, which posted 137% growth. Think about what that means. In an environment where every enterprise is watching its budget, Palantir is growing its commercial book by 137%. Their Rule of 40 score sits at 127%. For those unfamiliar, in enterprise software, anything above 40% is considered elite. 127% is not just elite. It is practically unheard of in the history of this industry. And they are doing all of this while maintaining 43% net income margins. This is not a company burning cash to buy growth. This is a company printing money while growing at hyperspeed. The reason they can command these numbers comes down to a moat that almost no competitor can replicate. Palantir is the only player in the AI space with Impact Level 6 authorization, also known as IL6. This is the clearance required to operate in the most highly classified environments in the entire United States government. Every other AI or large language model company is sitting at the bottom of that security pyramid. Palantir is at the top. You cannot just swap them out. They are baked into the national security infrastructure, and that entrenchment is precisely what secured the $10 billion Army contract. This is not a vendor relationship. This is a structural dependency. And while they are dominant in defense, they are simultaneously expanding into industries that have nothing to do with warfare. Palantir is working with Centrus Energy to deliver $300 million in savings across uranium enrichment operations. They are providing data integrity infrastructure for Polymarket in the sports betting world. They are scaling operational efficiency for GE Aerospace and Worldview. Palantir is no longer just a defense tech company. It is becoming the operating system for complex, high-stakes decision-making across every critical industry on the planet, which brings us to the catalyst that could change the entire near-term trading picture. The sovereign AI movement is accelerating, and Palantir is sitting at the very center of it. Palantir and Nvidia have teamed up on a reference architecture that positions Palantir as the intelligence layer inside sovereign AI deployments for governments and enterprises worldwide. The total addressable market for this partnership is estimated at $600 billion by 2030, $600 billion. While retail investors are zooming in on a few million in insider sales, the institutions are zooming out at a $600 billion opportunity and sizing their positions accordingly. And the Nvidia GTC 2026 conference is the event where this partnership could step into the spotlight in a way that forces the entire market to reprice Palantir's potential. Could this single conference be the spark that lights the fuse? I would not bet against it, because here is what the institutional ownership data is telling us. While some retail investors are spooked by the death cross, the world's biggest money managers are getting greedy. Total institutional ownership is now at 45.65%, and when you factor in long-only fund holdings, that number could be as high as 59%. Vanguard, BlackRock, State Street, these are not day traders reacting to a headline. These are the permanent owners of the market, and we saw ASIAM increase their stake in Palantir by 260% during this period. 260%. That is not nibbling at a dip. That is a conviction buy. When the smart money is loading up while the price is soft, history suggests you pay very close attention. And Wall Street's analyst community is catching up. The average consensus is a moderate buy with a price target of $192. But the street highs are telling an even bigger story. Rosenblatt Securities hiked their target to $200, citing Palantir's wartime leverage as a unique structural advantage in today's geopolitical environment. And both Citi and Bank of America are looking at a range between $255 and $260 as their targets. From today's price of roughly $150, that is a runway that very few large-cap technology names can match right now. Now, before I share my analysis on next week's trading setup, I want to share an important reminder like always. Nothing in this video is financial advice. I am not a licensed financial advisor. All content on Smart Stocks SAM is strictly for educational and informational purposes. Every trade carries risk, and past performance is never a guarantee of future results. Always do your own due diligence and consult a qualified financial professional before making any investment decisions. The numbers, targets, and setups discussed today are based on publicly available data and are subject to change rapidly in live market conditions. So what does the tactical picture look like for the week ahead? The optimal accumulation zone sits between $142 and $145, anchored by the 200-day moving average, which historically acts as a magnet during corrections. Right now, the stock is sitting on a critical psychological floor at $150. On the way up, first resistance comes in at $155, but the level that matters most is $160. That is what we call the massive call wall, a concentration of 28,000 call contracts sitting right at the $160 strike for March 20th expiration. If the stock pushes through that level, the mechanics of options market making take over. Here is why that matters. Right now, 52 million shares are sold short in Palantir. That is the tinder. The spark is those 28,000 call contracts at the $160 strike. If Nvidia GTC delivers positive news and pushes price toward 160, market makers who sold those calls will be forced to buy shares to hedge their exposure, and that buying accelerates the move higher, which forces more hedging, which creates more buying. That is a gamma squeeze, and the conditions for one are officially on the table. The one thing to watch for on the other side, the put-call skew has steepened recently, meaning sophisticated traders are also buying protection, just in case the catalyst disappoints. Be aware of both sides of that equation. Your final trade matrix for the week of March 16th through 20th looks like this. The bull trigger is a high-volume breakout above $160. If that fires, the gamma squeeze target is $170. Your ideal accumulation zone is 142 to 145 if the stock offers one last dip before the move. The bear risk is a GTC disappointment or a rejection at 155. In that case, expect a retest of the 142 to 145 support. My read? The fundamentals are too dominant. The institutional ownership is too committed, and the Nvidia partnership is too large to ignore. Any dip in this range is, in my view, a gift. Watch that $160 level. It is the key to the kingdom for the week ahead. That is the full breakdown for Palantir this week on Smart Stocks SAM. Here is the question I want you to answer in the comments right now. If Nvidia GTC does trigger a gamma squeeze past $160, do you think Palantir reclaims its all-time high before the end of the second quarter, or does the death cross ultimately win? Drop your take below, because this community has some of the sharpest minds in retail investing, and I genuinely want to hear where you stand. If this breakdown gave you an edge going into next week, show it some love with a like. It takes 2 seconds, and it helps us reach more investors who deserve to see data-driven analysis instead of hype. And if you are not subscribed yet, hit that button right now, because we are publishing setups like this every single week. Help us climb the YouTube hype leaderboard and share this video with one person in your investing circle who needs to see the Palantir story. Until next time, stay sharp, trust the data, and I will see you in the next one.